Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss where is rupee heading after election results are out. To form rupee's view in current situation, we have to understand three parameters: what is happening in US economy, what is going to happen in Indian economy, and what is RBI stance. So first, let me start with US economy. A recent data released by FDIC was showing that 63 banks in US are under stress. They have amounted close to $513 billion का unrealized loss उनके बैलेंस शीट पे दिख रहा है, which can have a negative impact on US banking system and which can further add problems in US economy. Another data point which is showing that US economy might be in trouble is lowering growth and sticky inflation. March पे growth was close to 3.4%. In the month of May, the data was 1.3%. Now inflation has remained sticky. This is putting lot of pressure on Fed whether they should currently go and cut interest rate or stay put. The third negative data point is rising household debt. We have already discussed several times in our YouTube presentation that US government debt is increasing. Now US public debt is also increasing. To give you a data point, in 2020 the debt was close to 14 trillion. Right now the debt is close to 17 trillion. Now when public debt and the government debt is higher, you will in the economy you will get lesser money to invest. When you have lesser money for investment, then growth will always get curtailed. So it's a vicious cycle: lower saving, lower investment, and lower growth. So combining 3 points, we can say that US economy is in trouble, because of which dollar index is going to face a tough resistance near 105 to 105.50 level, and gradually it should move towards 102.50, and at the later part of the year it can move towards 100 level. If this happens, it is positive for all emerging market currencies and rupee also. Now let us move to the second point, which is Indian economy. Higher economic growth, lower fiscal deficit, and stability in the central government were the key points which had given a lot of faith to FII and FDI to put money in Indian economy. Whether they will have the same kind of faith in the coalition government, that we have to see in coming days. When you are forming a coalition government, there you can get following challenges like populist budget, because of which higher fiscal deficit can happen, and instability might happen in the minds of FII or FDI. Because of these challenges, we have seen that FII have been selling in Indian equity and debt market from last 4 trading session, and they have sold close to 15,000 crore. Now the most important event as far as investors are concerned, they will be watching closely the budget of Modi government 3, which will give them a lot of clarity about plans of the government. So we have to watch what kind of budget Modi government 3 is bringing and how FII and FDI are going to invest in coming days. Now when FII are selling in the market, then the most important player becomes what is RBI stance. They say action speaks louder than word. On 3rd June, when the exit poll result came, rupee went to as low as 82.95. Market started anticipating based on closing of that day, which closed at 83.14, that RBI might have bought at lower levels of 82.95. On 4th June, after our market got closed, rupee touched 83.66 level in the NDF market. Post that, RBI have been able to manage the currency near 83.30 on the lower side and 83.50 on the higher side, which is giving us a signal that RBI might have sold near 83.55 kind of a level. So we can conclude that RBI will not allow huge volatility in the rupee and is going to protect rupee from sharp depreciation and appreciation. So now let us conclude outlook for rupee. Basically, first point, US economy is in problem. Dollar index can move towards 102.50 level, which is positive for all emerging market currencies and rupee. Second, FDI and FII might have entered into a wait and watch mode for some time, that is negative for rupee. Third, RBI will control volatility on both the side, which we can say neutral for rupee. So we can conclude that in coming days, rupee might have entered into a consolidation phase where 80 to 90 will act as a strong support for the pair and 83.70 is going to act as a strong resistance for the pair. So basically we can tell exporters and importers that if rupee is trading between 80 to 90, say like 83.10 kind of a level, importers should take this opportunity to cover their near-term imports. So for exporters, the selling area can be anywhere between 83.45 to 83.70 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.